we'll be using IRS Form 4562 to calculate depreciation on residential rental real estate. So this was a requested video by one of our YouTube viewers. So I appreciate you. I can't really tell usernames based on YouTube handles, but I'll put a mention in the show notes of this video. So since this form is only being used for this one specific example, we're going to skip the rest of the parts of Form 4562 that don't pertain to residential rental real estate. So that means Part 1, which is property that you would expense under Section 179. Part 2, which would be special depreciation allowance. We're going to use the Part 3, which is maker's depreciation. We'll walk through that. Part 4 is where we will summarize or kind of total everything. But realistically, this is the ending point. The back of it pertains to listed property and amortization, neither of which apply here. So there's a couple of things that you need to know about your property. So in this example, let's use the $200,000 as the basis for our depreciation. Now, to arrive at the basis of your depreciation for a residential property, you first have to take the value of the land out. So there are a couple of ways that you can do this. Usually, the IRS will accept a method where you use property tax records to determine whatever the valuation your county or municipality applies to your rental or your residential property. And then you simply prorate whatever the land value is versus whatever the improved property value is. And that percentage, applied to your actual basis of your overall property would be considered a decent basis. So let's imagine that this property cost all in $250,000. And from the property records, we're able to determine that 20% of the tax base is attributable to the land, and then 80% is the improved value. By running through that calculation, you would assign a value of 50% to the land, which is not depreciable, and then the remaining part would be your basis for depreciation. So step 1 is calculate the amount of your overall property value that you can actually depreciate, because land is not depreciable. So once we get into the amount that we can actually put into depreciation, there are a couple of scenarios which we would kind of go into play. So in Section A, we would take maker's deductions for assets placed into service in tax years before 2024. So if this is for a 2024 tax return, but you placed your property into service in 2023 or earlier, then your calculation is pretty straightforward. Your basis, $200,000, divided by the recovery period. And again, we're talking residential rental property. Don't confuse that with non-residential real property. That would be like a commercial building instead of rental house. So there are two lines here. You could have two different properties placed into service in that current year. So use the 27.5 year calculation. And if this was a property that was beforehand, this would be $7,273. And that would apply to pretty much every year that this property is in service, except for the first year and then the last year. And so there are various conventions that you would use to determine how much depreciation you can use on those ends. So there's what's known as a half year convention. There's what's known as a mid-quarter convention. And finally, there's what's known as the mid-month convention. So the mid-month convention refers to how you would calculate the depreciation for the year that you placed an asset into service. So that brings us to this line right here. So in this hypothetical scenario, let's imagine we put the property into service at the beginning of the year, January 2024. We've got our basis for $200,000. Now we can't take the entire 7273. We can only take part of it because the mid-month convention applies. The mid-month convention basically means that instead of taking the entire depreciation for the whole year, you can take the depreciation for the entire year after the month that it was placed into service. So you've got 11 months of depreciation, and then you've got 1/2 of the January depreciation, hence mid-month convention. So basically, if you divide each month into two pieces, now you've got 24 mid-month periods within that year that you placed the property into service, and you're able to claim depreciation on 23 out of those 24. You can't claim to the depreciation for that first half of January, even if you actually place the property into service with a lease that begins on 1 January. You still have to apply just the half month's convention. So when we do the calculation, that ends up being 69, 69, and 45. So really, that would round down to $6,969. Now, basically, you don't have to memorize all that. You don't even have to do the calculations. So first, if you're using tax software, that's going to provide the calculation. But there are tables that apply to this situation, and I will pull up a copy of the tables from the form instructions. So there's the table for half-year convention. This is the table for mid-quarter convention. And then this is the table for mid-month convention. So you notice that for both of these conventions, there is a column for when it was placed into service, and then a column for when it was disposed of. So in the year that it was placed into service, we multiply that full year's depreciation by this decimal right here. If we were going to place it into service starting June, you would use this decimal here, so on and so forth. So your tax software is already kind of has that built into it. But that's the calculation that I use to arrive at the 6969. So if I place this into service in December of 2024, then I will go to my trusty little Excel spreadsheet where I did all of this, and I would replace this value with $303. Now, the final example would be, let's imagine that you're in your last year of depreciation. You would not use this line at all, but you would use this right here to claim that last part of the depreciation that you weren't able to claim 27 and a half years ago, assuming you still have the property. So the 0.0417, you would take that depreciation in your last year, and you would basically get this number over here. So that 303 comes up here, and then the rest of this is blank. So remember, on one property, you're completing either this field if you put it into service before the current tax year, or you're filling out this line right here if you put it into service during the tax year, but you're not doing both. And then for the property that you placed into service in the 2024 tax year, you report it on this line for that year, and then your subsequent tax returns 2025 and later, you would be using line 17 up here. So also, you can also use an alternative depreciation system, which has a completely different class life that doesn't apply again to residential rental property. So you should stick with these lines right here and report that accordingly. So hopefully this helps give a little bit of guidance on how you would report depreciation for a single residential rental property. So first, determine your basis, and remember you're going to have to calculate probably offline how much your basis is attributable to the improved value, the building that can actually be depreciated versus the land that cannot be. And then once you get that amount, you can put that in here for purposes of calculation. And remember that you're not, even if you put the property into service on the first of the year, you are limited by the mid-month convention on being able to take the full amount of depreciation in the year that it was placed into service. So if you place the property, let's do one last example, and let's just say that you put this property into service in June. You would use this number right here, which happens to be the mid-month convention number for June. And that looks like it's roughly, it's not quite half of the total amount. Actually, this was the mid-month convention for May, I believe. So that would be the mid-month convention for May. And you can use that table in the form instructions. We've also got each of those tables for mid-month, mid-quarter, and half-year convention. You can follow that guidance in our article if you need step-by-step guidance. So again, once you get the depreciation calculated for the year placed into service, you would then have enough information to determine the full amount of depreciation, which will go up here into line 17 in subsequent tax years. So I hope this helps you out in terms of calculating your depreciation for residential rental property placed into service or already into service. We'll put links in the show notes to the article on IRS Form 4562 plus a helpful video on depreciation. If you have any questions or comments, please post them in the comment section. And again, please subscribe to our YouTube channel if you like our videos. Please subscribe to our newsletter if you like our articles. And if you have any questions or comments, please don't hesitate to put them in the comments section. Thank you very much and have a great day.